The week loaded with the corporate reports is coming to an end. Today, investors are focused on the batch of the macroeconomic data. The Fed's preferable inflation barometer, personal income and spending complement mixed fundamentals from the European Union and Japan. The Nasdaq logged the best performance yesterday. Its rally was propelled by notable gains in the high-tech sector, upbeat corporate reports, and signs of an economic slowdown. The benchmark stock indexes closed yesterday with a solid growth, and the Dow Jones climbed by 524 points or 1.57%. The Nasdaq closed with the strongest intraday growth of 2.43%. The S&P 500 rose by 1.97%. Futures on the US stock indexes traded in the red in the New York pre-market, having pulled back by 0.2 and 0.3% from yesterday's highs. And the S&P 500 is expected to trade in the corridor between 4,050 and 4,180 points. The rapid rally of high-tech stocks set the stage for notable growth on Wall Street. Meta shares showed the strongest gain of over 13.9%. The quotes notched the highest level in more than a year. The company reported higher than expected quarterly revenue. Besides, Mark Zuckerberg talked about the growing popularity of the company's services and the high sales thanks to artificial intelligence. As a result, the telecom sector of the S&P climbed 5.5%, the biggest intraday growth since February 2022. Apart from Meta, the index found support from Alphabet as it reported decent financial results earlier this week. After 4.6% intraday gain yesterday, Amazon shares jumped by another 7.6% in the pre-market. The company reported quarterly revenue higher than the consensus. eBay shares surged by 5.1% after the company presented the revenue forecast for the second quarter stronger than Wall Street consensus. Caterpillar shares went down because low order signals that demand could have reached its peak. Upbeat corporate reports offset the downside of the economic data released yesterday. The US economic growth slowed down more than expected because active consumer spending was downplayed by inventory investment cuts. Besides, the labor market gain disappointed investors with a decline in initial unemployment claims. The S&P 500 and the Dow Jones recorded the biggest intraday growth since January 6, while the Nasdaq looked the strongest intraday growth since March 16. Before the opening bell, the indexes pulled back from their highs because Amazon warned about hindrance in the cloud business development. Snap and Pinterest also added to the gloomy picture. Amazon shares dropped by 2.4% in the pre-market because its statement about returning cloud business overshadowed better than expected quarterly results. Snapchat shares slumped by 18.9% because the company warned that the next quarterly results might not come to expectations. Pinterest shares fell by 13.4% as the company presented a revenue forecast for the second quarter lower than Wall Street consensus due to spending cuts on advertisement. Intel shares climbed by 4% as the company said that gross profit would improve in the second half of the year. Cloudflare shares plummeted by 24% on the back of a lower revenue forecast. First Republic shares increased by 9.7% as the US officials are raging emergency talks to rescue the ailing bank. Besides, the US Fed is due to unveil its supervision survey of a Silicon Valley bank whose crash undermined the public trust in the banking sector. Ahead of the Fed's policy meeting, investor seller to the PCE price index released today, and the data didn't surprise investors but gave food for thought. The core consumer prices, excluding volatile food and energy prices, grew by 0.3% in March in line with the expectations. The annual rate, the Fed's preferable inflation gauge, was a bit pessimistic. The the PCE reading slipped to 4.6% from a 4.7%, but was higher than the expected 4.5%. It means that inflation remains stubborn. Personal spending in the United States rose by 0.3% in March as of February, but slightly higher than a 0.2% in the consensus. Personal spending remained flat in March at 0.1% as in February the market had projected 0.1% downtick. Bearing in mind yesterday's update on unemployment claims, the macroeconomic picture might revive pessimism on Wall Street, and the stock indexes could find support from corporate reports by oil giants ExxonMobil and Chevron. The currency market is trading on a roller coaster. The euros fell and the yen's collapse enabled a 0.5% increase in the US dollar index to 102 points. In light of today's macroeconomic data, the index lost the steam and again retreated to 101.8. The intraday corridor for the index is seen between 101.5 and 102.1. Having climbed by 0.59% to 102 points, a one-week high, the US dollar index pulled back. It owes its intraday growth to mixed economic data from Europe. On a Friday, the International Monetary Fund appealed to the ECB to go ahead with the rate hikes until mid-2024 because it's needed to curb high inflation. Mixed economic data arose speculations that the ECB would prefer a rate hike by 25 basis points, not 50 basis points. The greenback benefited from the crash in the yen that sank to the weakest level in 6 weeks due to the rumors that the Bank of Japan might eventually tighten its ultra-loose monetary policy. New Governor Katsuo Ueda expanded on how the policy could be revised. The optimism lost its steam following the US PCE report. Despite the strong labor market and the personal income growth, inflation slowed down in annual terms. The Canadian dollar is at a crossroads. The strong intraday growth of the US dollar offset optimism in the oil market. The USD CAD pair is now trading at 1.3640, 0.38% up. The instrument is likely to trade in the intraday corridor between 1.3590 and 1.3670. The red-hot macroeconomic data revealed a slowdown in the Canadian economy. Canada's GDP logged a 0.1% uptick in February, following a 0.6% increase in January. This score is lower than the consensus of a 0.2% growth. In the context of the dovish rhetoric of the Bank of Canada, the economic data might signal a pause in monetary tightening. Oil prices extended the moderate recovery. Brent crude is trading at $78.6 a barrel, 0.6% up from yesterday, and WTI added 0.5%. The crypto market is trading with a mixed sentiment. Popular cryptocurrencies are trading mainly in the red, retracing from yesterday's highs. Bitcoin lost 1.7% to trade at $29,100, and still the token has appreciated by 5% for the week. Top altcoins traded mixed before the publication of the US economic data. They reversed downward in sync after the reports. Ethereum, Solana, Ripple, and Litecoin shed from a 0.02% to 2.6%. Apart from the economic indicators, market quotes could be sensitive to high volatility because the term of a monthly CME Bitcoin options is expiring. This fact might encourage activity as investors are revising their positions to manage risks. Some traders could fix profits during the term expiration. Others could enter the market betting on further growth. As for the industry news, the market is monitoring the news on the court proceeding of Cornelius Steinberg, the founder and CEO of Mirror Trading International Proprietary Limited, who orchestrated an international multi-level scam to attract investments in Bitcoin. Starting in May 2018, Steinberg has defrauded over 23,000 people around the world, accumulating almost 30,000 bitcoins worth $1.7 billion by the end of March 2021. And Texas federal judge has ordered a staggering $3.4 billion to be paid, the largest Bitcoin fraud case in history. The technical picture for Bitcoin remains the same. The token has been stuck in a range of 28,600 to $29,300. The escape from any of the borders will determine a further direction. And that's all for today. We keep monitoring the financial market situation. Subscribe to the channel and see you on Monday. We wish you profitable trade and have a nice weekend.